Christina Brown here with the Brown team at Sage Door Realty. Are you self-employed, or do you know somebody who's self-employed and they have thoughts and wishes of buying a home? I know we hear this often. You're not sure if you can get a loan. You just don't know if you can get a mortgage. But yes, there are options. We help people all the time in this situation. There are actually lenders who specialize in helping these types of buyers purchase homes and set them up for getting a loan even though you're self-employed. Here are some basics. For them to calculate the risk, of course, they want to know the history. How long have you been doing what you're doing? And the experience and expertise you have can help with that. Your credit score, of course, your debt to income ratio, of course, any documentation, paperwork you have that could prove your financial stability. They will likely ask for all sorts of documentation. It depends on the lender and what your situation is. And then, of course, how much do you have in cash reserves? Are you stable financially that way, where you have some money to get you through some hard times? What kinds of loans are available to self-employed people? The same kind of loans that are available to everyone. You can go conventional, you can go FHA, you can go USDA, you can go VA, all those things, right? There are some other types of loans. These are a little more outside of the box thinking, and I always say the more creative the loan, typically the more expensive the loan, so you want to keep that in mind. There are non-qualifying mortgages. Offer alternative income verification options for maybe those people that don't fit into this perfect box like everyone else. Of course, there's bank statement loans where they can be based simply on bank statements and they'll scrutinize them. Typically, they'll go back 2 years on a lot of those. And then asset-based or DSCR loans. Those types of loans we typically see investors get, or hard money loans, things of that nature. So there are some creative options. I found some great tips that I thought could be helpful for those of you that are self-employed. Number one, separate your finances. If you have a business, consider setting up an LLC. Of course, I'm not a CPA, so seek advice from your accountant. But often setting up an LLC and separating your bills, your expenses, your income, those types of things. The IRS sees that and how your tax returns will be read by these lenders. And then, of course, maximize your down payment. You can always put down more. The higher your down payment, the less of a risk you are, the greater chance you have of getting a loan approved. And then, of course, work with specialists. Find those lenders that focus on helping self-employed people, or are willing to take a little extra time and care to help put together a winning file that will get through that underwriter and get approved. And then, of course, the last thing is improve your financial profile by boosting that credit score. Get a better, higher credit score, get out of debt. All of those things will help you. But there are options. You can absolutely buy a house. We've helped many. We're self-employed. We've bought homes. So it can be done. Reach out if you have questions or if you need a recommendation for a great lender. Have a great day.